Right, everyone, here we are with ticker symbol AAPL, Apple Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Apple had a run. Obviously, the new phone was coming out, and it created a rally, and it hit a high. It hit a new high of 126.58, all the way down from 104. It was bouncing around, and it worked its way up to these highs. Now it actually started to dip, broke through the 50-day moving average, and now it's hanging out sideways in bearish direction and bearish territory. So as of right now, it's hit a new low today, and we're going to look at it. That's our new support level, and it actually did not really do much when it came to working its way up. It actually just moved sideways. It didn't really do much. It broke through resistance, but it didn't hold through it. And the 50-day moving average is actually by default just coming closer to the price, which can make it easy for the bulls to reappear and bring this up. Or the bears can actually just chart to bring this down and tear this apart. So let's go ahead and look at the new resistance levels and new supports. So our support level slightly moved and our resistance slightly moved. So these are the last points before the end of the day. I know there was some volatility before, but honestly, that was before this point of leveling off and finally getting to this point and seeing that after this fall, how low did it go and how high did it go after that recovery? This was the highest that it recovered. This is the lowest that it went. And all of this right here is good points of reference to look at. But as of right now, these are the most important resistance levels and supports. So right now it's at 120.76. If the bears want to continue to dominate and tear this one down, they're going to want to break through support and move this further away from the 50-day moving average. And right now our 50-day moving average is 122.10. I'd write that down. That lets us know on what side of the chart we're in, and currently we are in bearish territory. The moment that gets crossed, we're back into bullish territory, and the bulls are starting to gain control again. Obviously, they need to break through resistance before getting there, and the good sign is that resistance and the 50-day moving average is pretty close to each other. Now back to the bears breaking through support. Our support level and the lowest point reached in the day and the lowest point reached in the last couple of days since this bullish run is 119.63. What I want to point out here is that there's a number pretty close to that way down here at 119.30. So if 119.63 does get broken through, I want to emphasize to all investors, pay very close attention to how this is reacting and how quickly this is hitting newer lows. Now, how quickly is it reaching newer support levels, and how quickly is it actually reaching, by what we see right here in the chart, to 119.30? Because if it breaks through 119.30, there's a lot of room for it to start to hit newer lows and newer support levels, breaking further away from the 50-day moving average in a downward direction. But before getting there, 119.63 is important. I pay very close attention to it. I want to emphasize that to all investors. Just be mindful and watch how this stock is reacting at 119.63 and how it's behaving. How quickly is it moving to newer lows? Is it kind of moving in a sideways direction to give the bears some loss of leverage and the bulls to reappear and start to bring it up? I mean, those are the behaviors to look for if 119.63 does get broken through. Now, on the other hand, we have what the bulls want. And the 50-day moving average is really close to the resistance, giving the leverage to the bulls to possibly cross the 50-day moving average and get back into bullish territory if they cross this resistance. This resistance is 122.01. The bulls need to break through it, turn it into a support, and start to break away from it in an upward direction to get back into bullish territory, hopefully crossing the 50-day moving average and breaking away from it to hit newer highs and newer resistance levels in bullish territory. So that is something that can signify that the bulls are starting to gain control in a sense of direction if they turn 122.01 into a support and break away from it to hit newer highs. Again, I want to emphasize 119.62. Pay very close attention how this reacts, because we're already in bearish territory, and breaking through that support just means that we're getting deeper into bearish territory and the bears are starting to gain control. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell. By clicking on the bell, you turn on all notifications to not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button to let me know you watched this video. And thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.